The first strategy is simple: zoom out. When you look at the market daily, every dip feels like a crisis. But when you zoom out to a 10-year or 15-year chart, those terrifying crashes look like tiny bumps along a long upward trend. Historically speaking, bull markets are longer. They grow more and they occur more frequently than bear markets. So, a bad week, a bad month, even a bad year does not define a great investing lifetime. Second, ignore the noise. Financial media makes money by keeping people anxious. Breaking news alerts, market panic headlines, and recession predictions. Don't let these types of headlines stress you out. Successful investors focus on years and decades, not days. Turning off the noise may be one of the most profitable decisions you ever make on your financial freedom journey. And finally, the most powerful strategy of all is automation. Instead of relying on emotions to decide when to invest, create a financial savings contribution system. Automate your savings and invest on a schedule whether the market is up or down, because your financial system will be far more reliable than your emotions. Your financial system should be making the decisions, not your nervous system. Now let me be clear about my own financial situation. If we experienced a major market decline, a bear market, or even a recession, I would probably feel the same fear that many people feel. I'm human too, I'm not a robot. And no one enjoys watching their investments drop. But here's the difference. I'm committed to continuing to invest consistently because I have at least 10 years and possibly longer before I would ever need to access my investments. The reason is because as a K-12 educator, I plan on working until at least 64 and possibly later. So by that time, I will have at least 2 monthly income streams that I can access without touching my investments. Those 2 monthly income streams are my Social Security paycheck and my Washington State pension paycheck. This allows me to stay focused on my long-term plan and strategy instead of short-term fear. 7 years ago, when I turned 50 years old, I had almost nothing saved for retirement. I felt behind and I felt frustrated, but I made a decision to start saving and investing consistently. Since then, I've crossed several milestones, and now I have well over $100,000 saved and invested, and that amount keeps growing because I'm contributing a minimum of $5,000 every month. So my commitment to myself is simple: keep investing every single month for the rest of my K-12 career. Not because the market is predictable, but because consistency and discipline beats timing. The wisest investors understand something very powerful. Market fear is often a financial gift to your future self. If you can stay focused and disciplined when others panic, then you give your investments time to compound. And if you're a K-12 educator or school leader trying to make smarter financial decisions for your future, then this YouTube channel is for you.